So we started the recording. We started off with AVAX yesterday, and we were looking at the 1641 strategy. So what we did, we went into the 16th hour, and in the 16th hour, we tried to create what we call key levels. So literally, this is our key levels in the 16th hour, right? We had a clear bottom here, and then we have this. We created literally this main ones in the 16th hour. And then we came to the 4th. So the 16th hour, we're looking for direction actually. We realize that the market is still is on an uptrend. It's not changed direction yet, but it looks like there might be a change in direction. But as it looks now, we are on an uptrend. So we created some key levels on the 16th hour. And then we came to the 4 hour. When we came to the 4 hour, we could still see the key levels we created on the 16th hour. These are they. But on top of that, we also realized that there are some levels which are important that we need to put on it. And we saw those levels on the 4 hour. One of them is this one, right? We've got this major one because it goes all the way down here. So we could actually stretch it all the way down here. We also saw that there was a level here which stretches all the way down to this part, right? We could actually, leave it out because this one can even serve as the same thing. If we choose to, we can actually leave it out. But let's leave that line there for now. And then we saw there was another level there from there all the way down to this bit in the 4 hour. So in the 4 hour, we added these 3 lines, right? Now, what we also did was we added the moving averages, and the moving averages that we added were the 5 moving average, the 10 moving average, and also we added the 20 MA plus. Those are moving average. We added them in. And I was explaining to yourselves that whenever we are on the 1 hour, and we see that the 5 moving average crosses the 10 moving average. Whenever the 5 moving average crosses the 10 moving average, we can go into a trade. When it crosses, we can go into trade. And that's what actually we're coming to look at carefully today, how to go into a trade, because sometimes you might not be around when it crosses. So what do you do to have the right timing to be there when it crosses? So what we are doing is let's go and analyze it first. We're going to analyze the market first and see what our strategy is and how the strategy works. Okay, so now we find ourselves in the 1 hour because we said the 16th hour would give us direction. The 4 hour would help us with the key psychological levels and additional psychological levels. And then the 1 hour will be the place where we would execute. Okay, so now when we are in the 1 hour, which I am in now, we are going to look at how we would have gone into the trade. Okay, so now in the 1 hour, what you could clearly see that. Let me push this down a little bit so we can have enough space to analyze it. You could clearly see that this is our key level from the 16 hour, the 16 hour key level, the 16 hour key. You can clearly see it. So in the 1 hour, let's say, imagine we are on any of the key levels. It could be that one, it could be the one in the 4 hour, it could be that one. Whenever we are on any of the key level, we should expect that there will be a reaction, meaning that there will be either a change in direction or we might break that key level and go to the next key level. So if, let's say we were here, and I'm going to put a line there. Right, I've put a line. Let me make it a bit thick so everybody could see it. I'll put a line there. Imagine we were here. How would we know when to enter the market? Because we're in the 1 hour, how would we know? What it is any time, and I'm going to turn off the price action, any time the moving averages cross, So here we found the moving average, the 5 and the 10 moving average crossing. We actually crossed somewhere there. Crosses, we then will come and check candlestick pattern formation on the 1 hour, and then we enter the trade. When we enter the trade, the place we are looking to take our profit will be the top here. So let me turn on the price action. When we turn on the price action, and then let me zoom in, so you can see clearly what I'm talking about. So it crossed there. When it crossed, it will call you. You could clearly see that on that psychological level, on that key level, we had something like a tweezer bottom and something like an extension. So it's really going to be on these 3 candlesticks. We've got a tweezer bottom and we've got something like a morning star when you look at it. So then that tells you that you can go into the market. You then will go into the market here. You go into the market there. Get it bright and stronger. So go into the market there, and then you will be in the trade. You ride the trade all the way from there, all the way up to this point, which gives you about 20%. It will take a longer time to ride that trade anyway. So we have options, yeah? So it takes you all the way up here to 20%, yes? So that is the strategy. Now, you get to a psychological level again at the top. Do you understand? When you get to that psychological level at the top, you are looking for an opportunity. So what we are waiting for is we are waiting for the 5 MA to cross the 10 MA. And then you could see that it crossed there. I'm going to put a line there. It crossed there. When it crossed there, you look for candlestick pattern formation. So it crossed, you can clearly see that after there was a candlestick pattern formation, there was a bearish engulfment at the top here. Even way before it crossed. But when it crossed there, you go into the trade. When you go into the trade, normally when you go into the trade, there will be something we call a retracement. But you can ignore the retracement and be in the trade. You are in the trade, and where you're looking to take your profit is way down here, right? So then you're going to be in the trade technically for a long time from there all the way down here. And then it's going to be about 4 days, 20 hours, and you're going to make 16%. If you leverage it, we are looking about over 100%. You understand? That is the basic theory. Now, let's do one more. So the one more is we're somewhere down here, right? Now that we are down here, what we're doing is we are looking for a clear sign for us to go into the market. We would have gone into the market when the MAs cross. So for example, the MAs would have crossed there, or let's say there, clearly, you know, or there, you know what I'm saying? So you could also decide that you would also wait for the 20 MA to start giving you a clear direction. When it's the 20 MA says, we started going green, which is up, then you can go into the trade, you know, or you can even here, we could have waited and say that when the MA, well, it started going red from here, and then we're going to the market, which is about the same thing. So here, I realized that when you go in here, let's go here and see what happens. So what I've gone into the market here, turn on the price actions. We rode this thing, and then the market came all the way bang. So then we would have lost the trade. But just when we lost this trade, we realized that the MA would have crossed again here. So let's go back and find where the MA would have crossed again back here. Now it crosses, we find candlestick pattern formation. We have this 3 is like a morning star. We go into the trade will retrace for some time, and then it goes all the way, retraces, it goes all the way. This time we were not able to, well, we had some sideways movement for a long time before we reached the top, you know. So therefore, what we have come up with is we normally would not wait thoroughly to go to the top of the trade. We will not wait. We will be taking profits and re-entering the trade whenever we get the opportunity. The question is how and where do we take those profits? Now, we know that for AVAX, we created psychological levels. The psychological levels that we created one for the main psychological levels and another for the sub-psychological levels. I have amended those psychological levels slightly, just slightly for the purpose of this one. And then, so these are our sub-psychological levels, and these are our main psychological levels with regards to this strategy. You can see we have a sub-psychological level here. We have a main psychological level. We have a sub-psychological level. So let's go back to the same strategy that we're using. We found that we could go into the trade from here. Yeah. When it crossed, you get an alert. You go into the trade here. What would you do? You started from this psychological level, which is technically the main psychological level. So let's stand off those other ones. We started from this main psychological level. You have an option to either go and take your profit from the sub-psychological level. And then when you go onto the sub-psychological level, you realize that there's something we call a retracement, meaning that the price went up and it came down. When it came down, what you will do is you will draw something we call a counter trend line. Counter trend line is you're drawing a trend line against these candles which are coming down. So when this candle start coming down, this next one came down, you just draw two lines to cross it. So this counter trend line, once you've drawn the counter trend line, once the candlestick breaks the counter trend line, you go back into the trade. So then you go back into the trade, let's say at this stage, you go back into the trade here, and then you will ride it from this psychological level to this other psychological level. Do you understand? So we'll do a first trade this way. First trade, we go into the trade from here. We make 5%. And then we wait. Once the candlestick crosses, we go into the trade again. Because you set an alarm on it. I'll show you how to set alarms. And then you make another 4%. Do you understand? Now, when it starts coming down, you do another counter trade, another counter trend. And then you set an alarm on this counter trend that anytime the price action crosses it, it should call you. It crossed on this one. Maybe that's not a powerful one. You wait. It crosses again, and then you go into the trade, right? This time we started from here. We started from this green. You can decide to go and take your trade, your profit on this one, which is 3%. You see, so then there's another counter trend here. So you move your counter trend across. When you move your counter trend across, anytime the candlestick breaks the counter trend, it will give you an alert. So it broke here, it will give you an alert. You go back into the trade here, and then you want to take your profit on this psychological level. So meaning that you go into the trade from there, you be in the trade will first retrace, you go be in the trade, you get another 4%, right? So this can be maybe a daily kind of move. You go in a day, you make your 4%, you're out. So you make your 4%, it will be here then. Now your counter trend would move up this way, right? When it moves up, and the counter trend only is calculating from the top. When the candlestick breaks it, or this one was a full one that breaks it, you're back in the market. You're trading to the top. Now we are at our main key level. So you would wait after you've taken this profit. So you realize that you'll be taking profit and profit and profit and profit, which is the second strategy. The first strategy, you could be in the trade since inception. And then what will be guiding you if you are using the first strategy, when you go into the trade at inception, move back to the 4 hour. And then the 4 hour will be guiding you. So for example, we've gone into the trade here. So long as on the 4 hour, the moving average, which is the MA plus, is going up, you can be in the trade until you reach your psychological level. Here, so long as the MA plus is red and it's going down, you can be into the trade until you reach your psychological level. So That is the idea if you're going the long way. So the long way, you would only use the 1 hour as an entry. So once you found your entry and you want to stay in it until the end of the psychological, until the end of the key level, then what you will do is move back to the 4 hours. And then as you're in the 4 hours, you should look at what is happening. So long as the MA5 and the MA10 are above the this thing, MA plus, which is the MA20, we are in the right direction. So then when it changes direction, when the MA5 crosses down on the MA, this thing, crosses down the MA20, then you can come out of the trade. So literally you can be in the trade from all the way there to somewhere there. And then that's about 22%. You see, so there are two strategies. The first strategy is you will be in it and then be guided by the 4 hour MA plus. Or you can go into the 1 hour as a day trader. And what then happens is you would be drawing, you would open your psychological levels. You need to readjust it, open the 2 psychological level. You readjust that one to give you the right spaces. And then you would trade from psychological level to psychological level, from psychological level to psychological level. That's what you'll be doing. And how would you trade that? The question is simple. You will put what we call a counter trend line on it. So once you've traded from this psychological level to this psychological level, you see that there's going to be a retracement. Don't trade this retracement because that is not the direction of the trend. Leave it, let it come down. Once we break a candle from there, go back into the market and trade in the right direction. So you'll be trading from here all the way there, all the way there. Do you understand? And so, hold on guys, I'll just go on and let 1 minute. I think there might be an opportunity. 1 minute. AVAX. What's happening on 1 hour AVAX? What's TDI? Okay. TDI meaning that it is likely will be going down. Okay. So now, what I'm just saying is the second strategy, you'll be using the counter trend line. So we came here, we counter trended. Possibly, this didn't give us a clear counter trend. It was hovering around here. So you move your counter trend. You would have moved your counter trend here and it would have crossed the line and then you would have traded. But when you traded, maybe you might not, you'll be looking to go and take your profit here. It wouldn't give you the profit. It will come all the way down before we start going again. And then you go and take your final profit there. You see, so you should just examine this kind of strategy and see how best it works. You know what I mean? For example, we came all the way here as a psychology, we broke the psychological level. So when we broke the psychological level, we went there. Maybe some people might find the necessary need to trade it, but there was no cross. If you can look at it carefully, there was no cross. You rather cross the bottom, cross down. But the trend, if you look into the 4 hour, at that time, the trend is still going up. So you cannot do anything. You just wait. If you were already in the trade, just stay in the trade. Right now, when you come here, back here, let's turn on price actions. That is where your counter trend line would be here, because the market was coming down. So you can either use a counter trend line like this, or maybe you can even come and use our trend line, the regular trend line that I showed you. Excuse me. You can come and use maybe a regular trend line from the top to the top here. So then you set an alarm on this regular trend line. When the candlestick crosses, you're back in the trade. You know, we started on this psychological level, so we should end on that one. And then you go into it, you take a profit here. Fortunately, it went up, but then this is the reasonable target you would have. It went all the way up. Now we retraced again. So when it retraced, we'll move our trend line. We'll move our counter trend line. And then you realize that the thing crossed, it crossed here, and then it retested. Normally, we don't get a lot of retests. So normally when it crosses, I would just advise you to go into the trade. If you're going into the trade here, we are looking to take profit here. It came all the way up. Possibly you might just fall shy of your profit, but then you retraced and it went buying and it took your profit. So that's where we find ourselves. I actually missed this trade this morning at 9 o'clock. I missed it because I was going to some appointment. Yeah, so this is how this thing works. So before we go, I need to teach you how to set alarms, right? I'll teach you quickly how to set alarm. Because we got the recordings, you can just go and then view it, and then you will learn it. Okay, so now to set alerts, you can set alerts on anything at all. You can set alerts on anything. For example, we have our trend lines, right? For example, you have a trend line, and you have a psychological level here, and you're saying that anytime price is going across your psychological level, you want to have an alert, right? So what you do is you click on that line. When you click on that line, you can see, you get a list of menus. You can see, you get a list of menus. Click on the line, and then you go into alerts on that line. And then it's telling you that when AVAX USDT is crossing this horizontal line, give me an alert. What you could then do is you can tell them for the candle to close before you get the alert, or when it starts crossing immediately, you can get alert. For the candle to close, you can say once per bar close. You select this one. If you don't want the candle to close, but you want them to get the alert so that you can go and watch what is happening, you say once per bar. These are the two options we have: once per bar close and one per bar. Meaning that, for example, what we are saying is that if, let's say, this candlestick is crossing this line, yeah, you want the candlestick to finish. When it closes and this other one will start, then the alert will kick in and tell you that, oh, it's fully crossed now. Alternatively, if you don't want it that way, and you want this thing to give you, the alert to give you a signal, immediately it crosses, you wouldn't finish closing, and then it will give you a signal. So you can come and look at it and maybe wait for it to close before you go into the market. You see, so if that is setting an alert on a psychological level. Next week, we'll be doing alerts, fully alerts. But let me just show you this now. So if you want to set an alert on a psychological level, just click on the line, you get the options, and one of the options is alert. So you say, okay, fine. When AVAX USDT is crossing the horizontal line, give me an alert. And you can select to say when the candle closes or when the candle just crosses. Do you understand? So then when you set this alert, so we've created an alert. That alert that we've created, it will go and sit in something we call our alert manager. Do you understand? And then you see it there. I think it might be this one. So this is the one. Anytime it will cross, it will give me an alert. So oh, sorry, that's not the one. Where are you? Crossing AVAX. This TDI, this SMA. This is where's that one? I can see it. Yeah, there's the one. There's the one we just set. So when you go into your manager, you see that it's sitting there as part of the alert you set. So, but that is how you set alert when you want to have a signal when it is crossing a line. Let me give you guys another one. For example, you want an alert for when, for example, the MAs are crossing. So what you want to do is, we have 3 MAs here, but we are saying that on the hour. So then the timeline that you need to be in it is the 1 hour time frame. Any time frame that you are in, if you set an alert, that is where the alert is going to alert you. So we are saying that we'll be in the 1 hour time frame. So if we are in the 1 hour time frame, all we are saying is that when the 5 MA is crossing the 10 MA, then we should be given an alert. Do you understand? So all we are saying is that we go into alerts at the top. And then on AVAX USDT, we are saying that we want an alert when the 5 EMA is crossing the 10 EMA. So normally what happens is, I'm going to close this and I'll do it again. So alert, normally you see AVAX USDT and you see value here, but we want the MAs or the SMA. So you go and find the SMA. You want when the 5, you select the 5 is crossing. So you come to where the value is crossing, where the value is the 10, and then you select the 10 EMA. And then you want the candle to either close. Hello, can you guys hear me? You want the candle to close. Hello, can you guys all hear me?
Yes.
Okay. You want the candle to close, or you want just when the candle, when it crosses, it should call you so you can go and have a look. Normally, I leave it on once per bar so that I will be there to see what is happening. Do you understand? But you can decide to make the candle close. Sometimes when you want the candle close, it gets too late. You cut the trade too late. So candle closes. And then here, you have to go and put a description, a proper description that when it alerts you, you can see what is happening. Now, we have options here. It says notify me on app. If you have the mobile app, and did that happen, it can notify you on the mobile app if you've downloaded the app. It says, and it says show pop-up. So you can show pop-up on my screen. So these are the 2 options that I'll select. I don't select send me email because it will send me too many emails. So then you come here and then you come in and tidy up this description properly. You can just write something like maybe MA5 crossing MA10 on AVAX USDT, and then you save it. So when you save it, it goes and sit in your this thing manager. That's it. Do you understand? So that is always going to be your leading indicator. There are times when you miss it. If you miss it on the 1 hour, then you can go into the 30 minutes to try and catch it there, because 30 minutes will give you more crosses. You can go and catch it there. But this is like for future, this thing, as we start using it, these issues will come up and then we'll fix the problems. So these are some of the ways to set an alert. For example, let me give you a third one and then we can go off. The third one is, for example, if you want to set an alert, let's say on TDI. Sorry. Let's say we want to set an alert on TDI. Yeah. And we are saying that, oh, please call us whenever we are in the 1 hour. And then TDI crosses the fast MA. The green one is the fast MA. It crosses the middle band. Because we said that when you look at the settings here, we had the middle band and then we had the fast MA. Do you understand? So all we are saying is that whenever this fast MA crosses the middle band, give us an alert. It is the same thing. Go to alerts. You see the coin that you're in, and then you would select TDI. And then you say crossing what? On TDI again. But here is where the options are. When the fast MA is crossing what? The middle band. And then you can tell him to give you an alert once it start crossing, or give you an alert once the candlestick is confirmed after it's crossed. Do you understand? So that's the same. These are the options you could have, you know, so then you set it, but then you come in and then you describe it properly so that when it pops up on your phone or something, you are clear what is happening. So you can put something like this there and say TDI crossing on AVAX USDT 1 hour, and then you save based on your options, either that or that, and then you save it and it comes and sits in your alert manager. Now in the alerts manager, whenever there's an alert, it goes into something we call this alert log. So your latest alerts will all sit here. Just in case you miss an alert, you find it all sitting here, and then you know what just came out lately. These are lots of alerts that I'm deleting right now. So then you can leave the latest alert. You can leave the latest alert there. You see, and then that's it. So now, if there are any questions, you could please go ahead and ask them before we close this session. Any questions?
Hi, Michael.
Yeah.
You see the TDI indicator.
Mm-hmm.
What exactly is it used for? I don't know
Okay.
if you explain this.
It helps you with direction. So for example, what we try to do is we try to have many confluences. Do you understand? What I mean by many confluences is that we try to have much more things telling us that we are going in the direction we think we are going, right?
Mhm.
So we have added a few indicators together to be able to give us that kind of confirmation. Generally, you would need three forms of confirmation, right? You would need, and these three forms of confirmation, normally we have what we call psychological levels, price action, and then an indicator. Do you understand?
Mhm.
We were using this cross,
Mhm.
the wave cross, right? So like this, for example, this is the 1 hour, but normally we don't use the 1 hour for direction too much. We use the 4 hour for direction, right? Now the 4 hours is just printed the green, which means we have to wait till it prints the top if we want to come down. Now we're going up. So what we use is we use this to confirm the direction. For example, we know that we've crossed or we're about to cross on the 1 hour going up. We know that we printed a green on the 1 hour, right? Now that we're green to the print green on the 1 hour, it means that we are around the psychological area. We could see that we clearly crossed the psychological area with this type of candlesticks. We have something like morning star and then an extension, right? That is one. We are at the psychological level. That is two. We want a third one, right? So if we want a third one, you see TDI. If you look at TDI very carefully, I'm going to put the line there. There. If you look at the line very carefully, you see TDI just try crossing this one. So you see TDI is also giving you a confirmation that true, we are going in the direction. Do you understand?
Yeah.
Yeah, so TDI is an indicator which helps us confirm the direction that we want to go. So sometimes CDI will just call you, that come and have a look. It hits this line, like come and have a look, there's something happening. And then so you can set an alert on TDI so that when it hit this one, it should call you. So then maybe you might be there and it's okay, fine. It looks like we're going. But you say, okay, fine. Even if we are going, let's wait for the MAs to cross, which means TDI has called you earlier because TDI is a bit early than the MAs. You can say, okay, let's wait for the MAs to cross. So TDI literally called you here. Let me make it thin. TDI called you here. But then you could decide that to be double sure, you will wait for the MAs. Then the MAs literally cross just about there.
Mhm.
You know, so you can say, okay, fine, TDI has called me, but I want to wait. So instead of even one indicator, we put two indicators there, or even three, because we have psychological level, we have candlestick patterns, we have this thing, how we call it, moving averages, and then we have this cross, this WT cross. So we've got so many indicators to tell you the same thing, which
Mhm.
means that you must get a few of them in confluence, minimum three, before you go in the direction. Is that okay? That makes sense.
Yeah, that makes sense. Thank you.
All right. Any more questions? All right. If we don't have questions, I'm going to close the the tutorials today, and then I'll upload the information later on. Thank you all. Bye-bye.